Welcome back to the Think Bigger Real Estate Show. I'm your host, Justin Stoddart. Very excited this morning. Pay attention, real estate agents. I have somebody here that's going to help you start this year to get going with your real estate investment portfolio. I know you've thought it's in the plans. I'm going to start working towards it. And you're thinking I need to have 25% down. Stay tuned. This guest today is going to open your paradigm. They're going to help you to think bigger. They're going to help you today start to make very serious plans and maybe even start making some moves when it comes to acquiring short-term rental properties. Before I introduce today's guest, I got you hanging here just a little bit. I want to remind you that we do have a podcast. If you're listening to us there, thank you for listening. Please give us a review. If you're listening on Facebook or another social media platform, please know that we put the snippets, the very best snippets of these shows inside of the Think Bigger Real Estate group on Facebook. So go interact and become a big thinker, high achiever. Back to today's guest. Her name is Avery Carl. She's out of the Panhandle of Florida, doing some amazing things. Avery, thank you so much for coming on the show today.
Yes, thank you so much for having me.
So last year, Avery sold over $140 million in property. Did I say that right, Avery?
145 million.
145 million to be clear. Mm-hmm. She only works with people right now who are short-term rental investors. So she's really niched down. Her background is not real estate. She came out of the corporate world. Tell us a little bit about how that came to be. I know you were in the music industry. Talk to us about kind of like how and why you decided to pursue your passion in the real estate industry.
Sure. So super long story, but in a nutshell, so my husband and I moved to Nashville in 2013 from New York City. And at the time, East Nashville was like the hip, happening, really fast appreciating place to buy something. And I didn't have my license yet. And our realtor at the time suggested that we buy something there because it's appreciating so fast. Your house will be worth double next year. But coming from Brooklyn, we were just really sick of neighbors. So we bought something out in the country with no neighbors. But we were like, okay, well, we have a little money left. Maybe we should buy one of those houses and maybe be able to do something with that appreciation money at some point in the future, maybe future kids, college, things like that. So we did buy a house there. We still own it. It's our highest performing long-term rental to date. And once we got that first rent check, we were like, oh, wow, we need to scale this. And then we learned that investing based on appreciation is the dumbest thing you can do. You need to, arguably, you need to invest based on cash flow. So we did all the educating ourselves on what we were doing after we already bought a place, listened to all the podcasts, started reading all the books, how to really build a real estate portfolio. And we had about one down payment worth of capital left to put into something. So we're looking for another long-term rental that's, maybe it was going to make us $500 a month after all the expenses. And I started thinking, well, how can we best utilize this last down payment that we have to make the most money possible so that we can buy more properties quicker? And I landed on short-term rentals. Did not want to do it in Nashville because the regulations in Nashville are so volatile. They change constantly. You can buy something one year and next year it's no longer legal to short-term rent. So we didn't want to have to deal with that. So we went a few hours east to the Smoky Mountains, the Gatlinburg, Pigeon Forge area of Tennessee, because there it's a very mature vacation market. And there's a lot of different types of these across the US. And we can get into that in a little bit. But it's been the normal thing for vacationers who go there to rent properties on an overnight basis rather than stay in a hotel. You can probably think like any beach vacation you've ever gone on, you probably rented a house or a condo. You didn't stay in a hotel. So because of that, the regulations were very, very friendly. And you didn't have to worry about occupancy. There's just so much tourism coming in all the time. So we bought one there. Again, no idea what we were doing, built our systems after we bought the property. But I found that in that process, there weren't really any agents in that market or at least that we ran across, who could really answer the questions about occupancy rate, return on investment, how to manage these things. They would just direct us to a local property manager, which we weren't interested in doing because they charge 20 to 40% of your gross. So I got my license to kind of bridge that gap and be that agent. And now that's how my company, the Short Term Shop, was built. So during that time, we scaled to about 5 short-term rentals within the year with different creative strategies, different creative financing. And now we've got a portfolio of 32 doors. They're not all short-term. Some of them are long-terms. But the short-term rental thing is really the way we use it is as a way to finance all of our other investments, whether that be long-term, short-term, multifamily. Or, some people want to just have all short terms because they do cash flow so hard. So that's great too. But anyway, so my company only takes on short-term rental investors we're in 3 states. So we're in Tennessee in the Smoky Mountains. We're in the Florida Panhandle, Destin, Panama City Beach area, and Gulf Shores, Alabama. And what we do is we help investors identify and analyze and figure out which property is going to be the most profitable, get them under contract, do all the regular real estate agent stuff. But we also have a full back-end trading program where we teach them how to manage these properties and the systems and tools to utilize so that they can manage the property remotely from their smartphone so that they don't have to pay a manager 25%. So we sold about $145 million across all three states last year. We're opening up a few more markets this year. And so niching down has been really beneficial for us.
It's brilliant. I do a lot of business planning with real estate agents, and I oftentimes will remind them that there's no 401k, right? That there's no real investment strategy for real estate agents. However, they sit on the very front lines of the best investment opportunity in the world, which is real estate, right? Mm-hmm. They have insider trading information as to what's happening when properties are coming and go. They just have an inside look at all of that. And to not take advantage of that, it's like missing out on half of your compensation, right? And so as I talk with agents, one of the things that comes to mind is I need to get a certain amount of money set aside so that I can buy my first or second or third rental property. And oftentimes, right, in our mind, that amount of money is 25% of, and let's say here where we live, right, it's average $400,000 price point. You need $100,000 set aside to start that investing process. You opened my eyes to something, Avery, here, that there's a bit of a loophole, right, when it comes to in vacation investment properties. Talk to us a little bit about that, because I think it will make 2021 the year that a lot more people start to build their portfolio as opposed to waiting till future years.
Sure. So the normal way to finance an investment property is a 20% down conventional loan. There is a loophole with short-term rentals right now. It is legal per Fannie Mae guidelines to rent out your second home or vacation property when you are not in it. Definitely talk to your lenders about what their overlays and the rules are. I'm not trying to tell you what to do. So something to discuss with your lender. But what a lot of people utilize is what's called a second home loan or a vacation home loan, and it's a conventional Fannie Freddie product. It's only 10% down, but there's a few stipulations. So the property has to be over 65 miles from your primary. So you're probably not going to be investing in the market that you live in, and you have to be able to have the ability to occupy the property some portion of the year. And you can't put any sort of a contract on it, like a lease or a property management contract that takes the control away from you of the property. You have to be in control so that you have the ability to stay there. So that's, and you can have one of those per market right now. So you can buy one in the Smokies and one in Myrtle Beach, or, wherever it is that you want to scale your portfolio to. So that is a really good way to get into real estate investing without having to, save up for that 20-25% down.
Again, I'll do the disclaimer that I'm not giving lending nor legal advice on this show.
Right.
However, I know in Avery's market, she's found that these are absolutely legitimate above board ways of getting investment properties quickly. So please talk to your favorite lender. If you need a recommendation, please contact me. I know some of the best in our area. Would be happy to do that. But it's fascinating, Avery, that then you can really start to look at scale, right? And you can choose where do I put my favorite homes, right? Like second homes. For us here in Oregon, you could have one up in the Snowy Mountains, right, near Mount Hood, or over in kind of Central Oregon. You could have one over at the coast, just like you're talking about. You can really kind of pick your favorite spots, have rental properties, and put 10% down as opposed to, the 20 to 25 that you're typically used to seeing. Again, allowing you to get into the building a real estate investment property earlier. Gary Keller said a real estate agent should look at of only selling the homes that he doesn't purchase himself. And I think that's a great paradigm when you get into the industry, that again, if you're not looking at each property of potentially how I might be able to acquire this property, then I think, again, you're missing out on a large, really kind of treasure pot within the real estate industry.
Exactly.
When you're looking for properties, Avery, and again, I want to get to how In fact, why don't you share with us now, in case anybody has to hop off early, how do they get in contact with you to get access to this information? Because I know part of that is I'm going to have to manage a property that's 65 miles away with short-term rental people. That sounds like a bit of a nightmare. How do they get access to kind of your training materials to help them understand that this isn't totally unreasonable to do?
My website, theshorttermshop.com. There's a number on there, totally textable. We're millennials. We like to text. There's also, you can follow me on Instagram. That's the best way to get a hold of me. I monitor that one myself. And there's also a schedule a consultation button on my website. So website's the easiest way. Short-term shop, theshorttermshop.com.
Okay. I love it. I love it. So again, if you're listening to this, you need to bolt theshorttermshop.com. Did I say that right? Go there, get access to this information. Let me ask a few more questions here, Avery, since I've got you. I'm super curious. When you're looking at a property and you're trying to identify, would this be a good property? Obviously, you've identified some of the criteria from a lending standpoint that will allow you to get that lower down payment amount. What else are you looking for? What are some of the keys that you're looking for when you say, ooh, that would be a good one? Obviously, you even mentioned, again, just to kind of restate what you said before, like check the kind of like the municipality, the laws around short-term rentals. What else?
Well, you want to, depending on the market that you choose, you want to make sure that you are buying something that is in line with what tourists are looking for. So a really good example is the Smoky Mountains. They are coming to stay in cabins and have a mountain experience. So if you go buy a brick ranch home, you're not going to rent as well as all the cabin people. And same thing with the beach market. You want to be walking distance to the beach. If you're driving distance to the beach because something is a lot cheaper, or you thought the property was cooler than what's available closer to the beach, even so, you're probably not going to rent as well because people don't want to have to drive to the beach from their vacation home. So you just want to make sure that you're buying something that isn't necessarily for you, but what is going to rent the best. So that's the biggest thing that a lot of people get sucked into is they start, when they're shopping for these things, they start to visualize like having family get-togethers there, and because it's exciting to buy a vacation home. Yeah. But you want to make sure that you're buying what is going to rent the best and not necessarily what is best for you personally.
Yeah, that's a great point. I would also invite here before we wrap up, if anybody else has questions that I haven't yet asked, feel free to put them in the comments. We'll get them answered now or later. We'll be sure to tag Avery in this so she can come back and answer questions as well. But that's a great point, Avery. If I'm going to a beach town, what's the experience that I want? You almost need to put yourself in the shoes of the customer, right? Which is a great idea at any level, right? With any business. Like what, if I'm coming to Myrtle Beach, for example, what's the experience that I really want to have? What's the ideal experience? And trying to find a property that best fits that obviously makes it pretty desirable for the demand of people coming into town. I love that. Now, any other tips that you could give us that would cause again, this audience, primarily real estate agents, to really start to see this opportunity differently, to see it as more attainable?
Yeah, I mean, it's 100% attainable. You only have to sell X amount of houses depending on what your market is and what your average price point is to be able to get into one of these things. The other thing that new investors can get caught up in with this is trying to over improve a property. So what I mean by that is it's okay just to have a cute, nice, plain Jane place to stay. It doesn't have to be like, you don't have to make it a full Star Wars themed house for it to rent if you're buying in the right place. If you're in metro markets, you do have to do some things to stand out. But when you're in a heavily tourism driven market, they're going to rent regardless. Like I was showing a property the other day that was junk. It was complete junk. And, but it was on the beach. And when we were leaving, somebody was checking in. And so, if it's in the right place and it's just a cute, nice place to stay, it's going to rent. So don't worry about having to upgrade everything. You can really get caught up over improving a property and spending unnecessary money. Like you want it to be nice, but you don't have to go overboard.
Yeah, it sounds like location speaks more than anything else, right? Mm-hmm. Get the right spot and you won't have to make as many improvements. Great stuff, Avery. Let's go to my final question. Again, you've done some big things. You came out of the corporate world, jumped in, like all in, not just building an investment portfolio yourself, but now you're teaching other people. You're selling $145 million a year in real estate. And you're, again, training and equipping people to go be investors. What does Avery Carl do to continue to be a big thinker, to continue to expand your possibilities? Kind of pull the curtain on your mindset a little bit.
Well, to me, the more properties I own, the freer I am to think bigger and to do other things, and mainly just hang out with my family to be honest, but we got an RV this year. So we've set up the mobile internet and planning a month-long trip in the summer. We did a 2-week one over Christmas. But owning property is what has allowed me to do that and what will continue to allow us to do that kind of thing. So to me, owning property is what leads to financial independence. It doesn't matter that I sold 145 million in real estate. That's doing work. The passive stuff that's making money while I sleep, that's the thing that's going to allow you to really to think bigger and do whatever it is that you want to do or live however it is that you want to live.
I love it. Yeah, real estate empowers you to actually think bigger. It creates the space. Sometimes people want to think bigger, but like when the bills are always coming, you're always on this rat race of having to go chase more commissions. And it's not until you implement a strategy like you're talking about here, where those bills start to be covered by other people, that you can start to actually have the space to think bigger. I love that. What a great answer. And Avery, I want to thank you so much for what you've contributed to today. Just your inspiration, as well as the ideas and concepts, are absolutely fabulous. Again, for everybody listening here today, if you go to the Short-Term Shop, is it Short-Term Shop or the Short-Term Shop?
The Short-Term Shop.
The
shorttermshop.com.
You'll get access to the training that will help you, again, get going on your real estate portfolio in 2021, as opposed to delaying it out another year. Avery, been such a pleasure. Thank you so much for coming on the show today and sharing some of your expertise.
Yes, thanks so much for having me.
You bet. And my final request of everybody listening here today, 3 simple words, you know what they are. They are go think bigger. Thank you so much, Avery. Talk to you soon, everybody.
Okay, thanks.